Son las 2 de la tarde, bienvenidos otra vez, benvinguts un altre cop, welcome again. Ahora la sesión que vamos a llevar a cabo se titula BTAX and Wealth Management, ¿dónde invertir? Muy a menudo cuando hablamos de las zonas económicas surge la pregunta de dónde invertir en un mundo que tiene constantes sociales y económicos con unos mercados que son cada vez menos predecibles. Se discute, por ejemplo, la imposición de un impuesto global a las ganancias y de la mano de expertos mundiales vamos a explorar las nuevas tendencias mundiales y a debatir el futuro económico a mediano y largo plazo. Es un panel en el que nos vamos a conectar con Ginebra, con Ámsterdam, con Bogotá y con Dubái. El moderador de esta sesión va a ser James Bernard. I think you're already here. James, hello.
Hello.
You were a speaker here last Tuesday, so thank you for being again with us. I'm glad to have you.
Great, thanks for having me.
Pleasure. We're going to introduce you a little bit to our audience in Spanish. James Bernard es el jefe europeo de DMCC, que es el Dubai Multi Commodities Center. Trabaja allí desde 2006 y desde 2009 es el director de desarrollo de negocio con 19.000 empresas trabajando con la DMCC. Posteriormente, como jefe de ventas, ayudó a la entidad a crecer muchísimo, como nunca antes lo había hecho. En 2020 fue nombrado delegado regional para Europa y continúa trabajando como consultor de desarrollo para empresas del Medio Oriente. Actualmente se encarga del desarrollo del Crypto Center de la DMCC. También colabora escribiendo para varias publicaciones del sector. So James, now our audience knows you a little bit more. So whenever you want, you can proceed.
Thank you very much, and good afternoon to everyone joining us here today at BNU 2021. I'll start off by welcoming and briefly introducing our very knowledgeable panel here today, starting off with Dr. Natalia Zitvitz. I'm sorry I did such a bad pronunciation on that one, but Natalia is a wealth planner at Bank Pictet. She's a lawyer specializing in international private law, focusing on commercial, trust law, international wealth and tax planning. And she's based in Geneva. She could probably do a better job than I did at introducing her. And next up is Santiago, and he's managing partner at Prolitus Capital Partners, which is a multifamily office experienced in the field of private banking, focused on financial needs of clients, specialized in portfolio management, trust securities, client relationship. And Santiago is based out of Colombia, I believe. So thank you very much for joining us today. We did have a third panelist who might join us. I think he's having a little bit of a struggle getting connectivity where he is, but we'll get on with the event in any case. So thanks all for joining us. And also to the panelists, please feel free to jump in at any time and contribute to all of the topics we're going to cover, whoever the question may be aimed at. And I'd like to maybe set the scene with a question for you both, starting with Natalia. We've all seen a rapidly changing global business environment since COVID started at the end of 2019. So how have you seen this influence the general approach to investing, and what changes in your clients' attitude to estate and wealth planning have you observed?
Thank you, James. Thank you for inviting me to this panel. I'm glad to be here. I hope you can hear me very well, but as you have smiley face, I understand, yes. So in terms of COVID and the client's attitude, that I know the most is the attitude to wealth planning in terms of estate planning on what will happen with my assets when I'm gone. I have to say that we always have this discussion with my colleagues from different jurisdictions, and as I cover mostly Central Europe and Eastern Europe, people don't like to talk about death and what will happen to their assets when they are gone. So this time allowed us to actually get to this question. That's not that scary question in essence, and that pre-planning is good. And it's not only about the taxes, it's also about preparing the next generation to this transfer of assets, if it's not only portfolio but some business assets. And I would say there are also an interesting tendency that there are some clients who say, we don't want to give our children anything. We just want them to earn their own assets, their own money. So then we hear a lot about philanthropic aspirations of the existing clients who start to consider maybe there will be a charity or some project that is of interest to me that I would not say donate, but dedicate my funds to. So this is the tendency I see, that they think more about how it will pass to next generation, or if it's not next generation, what are the organizations, community maybe, or cause that they will dedicate their efforts to. And this is like the main tendency. And the second is I see that they think about taxes in also globally in terms of estate planning on what taxes we are paying, not only now, but what will happen when we are gone.
And Santiago, I know you're based out of Latin America, but how do you see that? Do you have anything to add on that?
Hi, James. Thank you very much for the opportunity. Great pleasure to be here and sharing the position from Latin American region. And recalling what Natalia called us, it's been very important that what COVID has brought to families and how they think for the future. Mainly what I've seen a lot is that involving the rest of the families in their businesses. That's a thing that has been changing a lot. I see the main owners bringing their younger, the future generations into their businesses, involving more in what can happen when they are not around. Also understanding that investment should have a sustainability purpose. Also, I've seen a lot of families tending to invest in sustainability, helping the environment, and I just wanted to recall that. Also, all the tax planning that evolves and involves this relationship with their family is very important, and that's what I've seen and what I've seen here in the region.
Yeah, no, that's great. That's going on to the region a little bit, having a focus where you are at the moment. Maybe you could expand a bit on Latin America. It certainly has its challenges for investors, but what opportunities do you see, and what regulations are there and regulations coming into place that will create more stability for regional investors?
Okay, what I see of opportunities, I see it around agriculture, mainly I can talk deeply in Colombia. There's great opportunities in agriculture and real estate. What main investors are looking is tax stabilization for them here locally. What they have encountered in previous years in the region is that you have change in governments, and what you encounter is change in the way business are taxing. So what they main look is stability on tax benefits that they can get investing in the region. And also I see great opportunities around, as I was recalling, in agriculture and real estate. As you can see, we have an stabilized climate all year long. You can cultivate here in the region 12 months of the year. And also there is a mid-class emerging in a very important way, benefit all the real estate investments that an investor can produce. So I will say that mainly those two topics are what I'm seeing very important. Also, the demand of new venture kind of businesses have emerged in the region. Colombia is one of the main players of venture capital lately. A lot of good ideas have emerged locally. So I think those three topics might be the most interesting for investors in the long term.
And can I ask you, I always ask this because we've been very focused on it over the past couple of years, and that's the distributed ledger technology, blockchain, crypto space. I know that in a sentence sort of crosses over multiple use cases and multiple underlying technologies, but is that something that you're seeing in Colombia and the greater Latin America as an investment opportunity?
I think that the acknowledgement of the crypto world is beginning to start in the region. I think we are a little behind on what is happening in the rest of the world. But as you can see, it's a new topic that is emerging everywhere. So it's keeping eyes of local investors. It's very important to begin seeing new opportunities in the crypto world and in the blockchain technology. But we are starting. There's a new movement going in, and you see investors very curious on how they can approach these new emerging technologies around crypto and stuff.
That's great. And staying with you just for a moment, you mentioned agriculture. Of course, Dubai, the UAE, is a big importer of agricultural products. We're very involved in facilitating the coffee trade from Latin America. In terms of the movement of investment from the region to the outside, every country would like to see less of that, obviously, because they'd like to keep the wealth generation within the region. But obviously, that's not always a possibility. I know that Latin America is seeing its fair share of funds move out of the country. So, what are the main drivers for this, and what's the sort of strategy going forward?
Yes, and unfortunately, as you can see, the region has been a very political unstable the last 15, 20 years. So you see change of governments, and that have generated a lot of fly of investments locally. So what's happening is that investors locally tend to feel a little bit risk on having their wealth in their country. So we've seen a fly away of those investments from the region. Those investments lately have seen an interest part is that they are looking for long-term investments outside of the region. So they tend to allocate money into developed countries, real estate investments, and regular capital markets opportunities. I see that this might keep a little more years, this tendency of flying away from these countries. You've seen it in the last couple of months with Peru, last year with Mexico, and we hope that this stabilizes in the midterm, but in the short term, I see that the tendency will keep. And the challenges for these countries is to show that they can be stable politically, so they can keep their money in the region.
That's very interesting. Natalia, we're always talking about the multifamily offices and single-family offices and the new generations. And we're seeing, I guess, over the past 18 months and even longer, a real sort of trend to look away from the traditional markets to find investment opportunities. Myself being representative for the UAE and for Dubai, for DMCC, we're obviously happy about the sort of focus on the UAE and the region. Are you seeing that in your client base? Are you seeing opportunities coming up in the Middle East that weren't there before, and maybe more of an appetite to reach out to those opportunities from your clients?
Thank you for this question, because as I mentioned, I work mostly with Central and Eastern Europe. It depends on the country. Some of the investors already looked at these opportunities a couple of years ago before COVID started. I would say that I think there's an era before COVID and after COVID. Some of the clients are still considering if it's good to go out of Europe this direction, maybe worth to stay in Europe for their purposes, or in the region, as Santiago was mentioning, more investing in the region where they live.
Yeah, interesting. It's I guess it goes from industry sector to industry sector, because we saw a lot of companies wanting to diversify in terms of geographic location in order to make them more nimble. They've learned some lessons over the past couple of years, but I mean, it's great to have both of you here with such diverse knowledge, and I know that the attendees really will want to know what's next, where the opportunities are, and where they should focus. So are we seeing more investors allocating money in alternative investment opportunities? And where's the appetite, and what kind of funds do clients tend to want to invest in now? I think if we could start with you, Natalia.
Yes, I think this is the time when the funds become more and more popular. What we see that the clients are interested in the thematic funds that are dedicated to certain subjects. It could be funds related to environment, of course, to sustainability, to green energy, to everything that contributes, robotics, cosmos, everything that contributes to the future and development as they see it of a better future. I wanted to add, when Santiago was commenting about Bitcoin and investments in securities, if I can do this now, James, I see that. I personally believe that it's a quite interesting topic, and maybe that's also the funds what will be created, the funds with Bitcoin, with cryptocurrencies that will become more popular. And I'm, as a lawyer, look at this from the perspective that once we start regulating something, it becomes more and more essential. And in Europe, regulations about cryptocurrencies becoming more common. And as a matter of interest, I returned yesterday from Kiev, and on Tuesday we discussed the draft law on cryptocurrencies, and on Wednesday it was already signed. So I think that's a sign that if you want to regulate something, not only in terms of legal, civil aspects, but in terms of taxation, and the question I always ask, how you, for example, tax the donation or the inheritance of such assets, then this means that it becomes extremely important, interesting, or is already important and interesting for investors, and then the states try to find their way to manage how they get taxes, or how they, I would say, provide for protection, and at the same time get the payment in form of taxes for this protection.
Yeah, I guess that's a good point. You need to have that legal framework, that regulatory framework, in order for people to feel a bit more secure in investing in new sectors. There are a number of funds, a growing number of funds and investment opportunities across blockchain and decentralized finance. And as you said, there's a number of countries who are coming up with regulation, such as Russia, and I think the UAE is leading that as well. So it's very exciting. I guess it's another kind of investment, because we've had these discussions before, and the risk is slightly different than a normal associated risk with investing in maybe something that's has more history to it. But there doesn't seem to be any lack of appetite for it. So I think it's interesting. And Switzerland obviously is a key place where activity is happening from that side. And even our partner, Crypto Valley Venture Capital, who partnered with us to create our crypto center in Dubai. Obviously, they were one of the partners that were involved in building Crypto Valley in Switzerland. So it's a real home away from home, I think. But I think there'll be more opportunities and people more understanding of that space, which is quite exciting. And I think in South America as well, there's a growing use case for cryptocurrencies, and therefore people are understanding it a bit more and wanting to be at least have some of their portfolio investment in that space.
Yeah, that's correct, James. I'm seeing like an emerge of a new asset class. So you now see that the distribution of their portfolio might encounter to have some exposure to crypto, meaning blockchain technology or cryptocurrencies. So I think it's an asset class that is emerging. We use in the family office some funds dedicated to that kind of asset class. We don't do it directly. There's, I think, that still some misknowledge on how to keep those crypto and wallets and all that. So we use funds for that purpose. And pointing out the question of what are we seeing on alternative investments, I think that the growth and the needs of more alternative investments for clients is growing at a very fast pace. You see fixed income in the lowest returns in history. You see equities at the highest range price earnings in history. So there's no space for those assets in many portfolios. So there's a migration to alternative investments. I see that there is a great opportunity on the mid-market funds, ranging between $200 and $2 billion. There's a niche emerging in this kind of funds. I think they can capture a lot of the exposure on private equity, on real estate. There's great opportunities, and that's what we've been following in our strategy. Obviously, main concentration real estate for our clients. Latin American clients tend to allocate their piece in alternatives a lot in real estate, meaning direct exposure to projects or funds located mainly in the United States and a little in Europe.
Really interesting to hear that. And what investment for the futures from a wealth planning perspective? We're all, I think, agreeing here, creating a well-structured plan for investment is very important for proper wealth preservation. But what investment strategy do you recommend for wealthy clients at this point of time, considering all of the factors that are going on in the world? Where's the balance? Maybe we could start with you, Natalia.
I would say I look at it from a purely wealth planning perspective, not the strategy for investment. What I believe is that we have times when we'll have this very nice word that is often used, holistic approach, that before we invest, we will look where we live, what jurisdiction is going to tax us, where we invest is meaning are there any additional taxes we should consider, and if yes, are there legitimate and stimulating investment tax discounts or double tax treaties that allow us to minimize the tax burden that we would face. Then I would say that we will also, before investment, even long before investment, think, okay, if something happens to me, what will be the taxes my heirs have to pay? Because maybe it will not be only the cost of the investment, but some of the capital that is set aside. So I would think it will all come in considering also like the jurisdiction where the clients or the investors can potentially be, because we know how fast the world is changing. And today we live in one jurisdiction, for example, in Eastern Europe, and tomorrow we move to Colombia. And of course, there will be a lot of aspects on reconsidering the portfolio that we have, the assets that we thought are so dear to us, but maybe when we move to Colombia, investment in those assets will not make sense because there will be so many cons against having them in the portfolio due to taxes, due to location, due to additional jurisdictional risks.
And before I ask Santiago to respond to that, in terms of your comments on dual taxation and sort of globalization, it's a really important point, because people are struggling to know where to live these days, I believe. And we all talk about a global passport where you can be anywhere, but that really isn't the case. And you're not allowed to talk about tax too much in certain occasions, or may I say, managing tax or avoiding tax. So the world has changed a lot from say 10 years ago, and dual taxation treaties are becoming more complicated and potentially are going to be removed in a number of cases globally, because there's so much competition between the regions. What's your view on that? I mean, things have changed in terms of, I'd say, tax efficient areas and tax planning and structuring.
I agree. I mean, 15 years ago, we were saying that there is a huge difference between tax evasion and tax avoidance. Mm-hmm. Now, when we say tax avoidance, it already sounds not, maybe it doesn't have the same taste as tax evasion, but it does not sound very right. That's why I use so many nice words to say way stimulating the investor when I was saying leading to minimizing the tax. As you know, and I think we discussed it all briefly, that European Union countries, for example, plan to have a common corporate taxation for all the companies in European Union. I think it may be the future that the countries at some point will agree on a common corporate tax. But on the other hand, I think, as you said, there will be too much jurisdiction struggles, because as an example, in Eastern Europe, former Eastern or European Union countries, in Estonia, for example, there is no corporate tax, but there is a tax on dividends when someone distributes the profits that are in the company. And it makes sense to have such jurisdiction, because it allows the investors to use this company for new projects without taking the money out. I know there are quite a lot of other jurisdictions who provide this opportunity too, but it's, as an example, I took this jurisdiction. So I believe that in some cases, such diversification of taxation is not bad, because it stimulates some of the industries and also development of projects. I'm not sure that it will be ever possible for us to have the same. Maybe I will be surprised in 5 years, but I don't think it will be possible for natural physical persons to have the same rate of tax in every country. It's just, even now when we look what taxes are in France or in Germany and UK, it's different systems, and they have also different traditions why taxes built this or the other way. I would say that there will be always a lot of pressure on the countries with no tax at all, because I understand that a lot of people go to live. We know all these jurisdictions to live there just because there is no taxation. But on the other hand, I always say to the clients, if you go to countries where there's no tax, there will be other fees that you pay for the lifestyle, for the property that is extremely expensive. So at the end of the day, the best jurisdiction to live is where you feel comfortable, and then try to invest in assets that would be taxable, because there is no way not to pay taxes. But maybe there is a way to plan it that these taxes will not feel so high as they would have felt if you don't plan. Because living somewhere just for taxes is no fun at all. If I can end with this line.
You put it so eloquently. It's actually, I agree. I totally agree. And it's different countries offer different benefits, as you say, and have different attributes. So it's very difficult to say, okay, well, there you're going to charge 20%, and there you're going to charge 10%. There may be other payments that you're required to pay, or a higher cost of living, or whatever it is. So it's extremely difficult. I like the dividends scenario you came up with. I think a lot of countries are looking at that to try and stimulate the startup and scale up ecosystem. encourage people to invest in these companies and not have such severe tax consequences when you're really a kind of a higher risk investment. So I think that's a very important one to cover as well. Santiago, do you have anything to add on that previous point?
No, yes, James. I just want to point Natalia's beginning topic about the planning on the structuring of the investment. I think that if you take a percentage of what do you intend on planning, I think that a very important part is how do you structure that planning of investment? Where are you located? Where is your tax? Where is your fiscal responsibility? And then you, after discovering and understanding what are your needs under that topics, you begin planning all the investment strategy. And adding on that investment strategy, we tend to follow the endowment strategy for families nowadays. So long-term commitment to investments, tending to invest in the long term, and the best way to allocate long-term investments is through alternative investments. I pretty much encountered for families that have a planning on distributing their assets in the long term to allocate a big important part of their portfolios in alternatives. They offer a very nice coverage over volatility that public markets have. And also you can establish good returns in the long term. So that's the things that I will into that strategy. Also identify where the tax efficiency comes. I think that the word that I've been heard a lot lately about the tax, how to pronounce the tax word is tax efficiency. I think that that's a very important thing on how do you approach any kind of investment is the tax efficiency that you can encounter based on where you live or where you plan to live in the future now.
Right, good point. And Natalia, I mean, so we all believe in estate and wealth planning, and we understand they're pretty essential when investing. But what's the right moment, I guess, to consider the estate and wealth planning? And yeah, what's your advice on that?
I would continue what Diego was telling, that it's long before you start investing. It's just now when you think about investing, you already have to think about it at the same time, because the earlier you start, the better it is. I always say to the clients that it's much more easier to plan and implement the plan than to change what you have done, because redoing even the planning that you have implemented, it's much more expensive and complicated. I will not go into details, but for example, in some jurisdictions, due to regulations on currencies, it's still more beneficial to invest via vehicles, by which I mean some corporate structures. It can be company in any jurisdiction. But also when someone starts to make a company, it's not only about the legislation in the jurisdiction where this person is situated, but it's also the global trends on the what is place of effective management. If we talk about companies, it's the question of management and control, because if we really do a corporate structure, we have to think about we cannot have it managed from where we live. It's a matter of making all the steps correct, and to make them correct, you have to do it beforehand. And if we don't talk about corporate structure, but for example about inheritance, I had a very interesting client case, especially due to COVID. It was interesting to see how the clients develop in mentality or change in how they approach this situation. So had a client, also a jurisdiction quite known for having no taxes, Monaco, and he decided that he needs to write a will. And before that, my usual discussion would be just what is a will and how it will function. But here we went through all the steps, and I would like to mention some of them because I thought it was interesting in terms of how much you really need to know before you even write a will. We looked at the legislation in Monaco that allows, for example, to choose the law of the country of the citizenship. And then what we were discussing is the comparison of all this, because he had a couple of citizenships, all the citizenships and Monaco law. And it was still not about taxes. I mean, we know that there are different jurisdictions that will ask you to pay tax from the persons who receive inheritance, and some jurisdiction tax the one who gives the inheritance. This was not even looked at. It was the question on, for example, how the will be opened, what rules will be applicable, are there, the most essential question, forced heirship rules, or this portion that he cannot really give to anyone he wants. And for me, it's one of the most interesting topics because we don't think about it, but there's actually limitations even on our will in most of the countries on how we can pass our assets to the next generation. Then we looked at his portfolio and segregated the investments that were made. And most of his portfolio was in US securities. So we looked if it's a portfolio, if it's a debt or not, because as we know, there is a state tax in US that we don't think often, but we have to think about it because it might amount to 30%. We looked at which securities will be affected by this tax, and we made a plan on what he will do with them, or at least there is information that there might be a tax risk. And next step was to get a legal opinion in jurisdictions which the law for which he has chosen. Also, for example, for Monaco notary to realize that some aspects that seem doubtful or maybe not in according with Monaco law are regulated differently in the jurisdiction of the citizenship. And the last but not least is to talk to heirs and explain the steps that they will have to take if something happens. And I think that the moment to plan is now, because even such as simple as it seems, but not simple in action, writing a will or making a will can take a lot of time.
Yeah, it's a minefield, isn't it? And something that everyone should start thinking about earlier on. Bit of doom and gloom, but you know, it's better to get done these days, especially if you're a larger family or a complex.
Can I add something? Or
please?
I always say that it's a different mentality between jurisdictions. Like, you know, in Eastern Europe, it's different from the Western Europe. And when I discuss with my colleagues, I did a training on trusts, and one of the professor's first remark was, when I was 6, I already knew that my grandmother made a trust for me. When I was 20, I made the trust on my own for some of the people I wanted to be my heirs. I say a bit differently. I say whenever you have the first $1,000, you start to think on who will inherit it, and maybe that's the right approach. It's not about age, for sure. It's about thinking what you want to do, what you want your assets to bring. Do you want to leave them to someone, or maybe just spend it all now? It's also a good possibility.
No, very good point. And one for you, Santiago, to start with. We've seen a lot of independent advisories springing up globally lately, maybe opportunistic, but are you seeing the same path in Latin America? And do you see this as a challenge?
Yes, James. There's an emerge of independent advisors growing worldwide. We saw a big tendency in Europe and in the United States 2 decades ago the formalization of these independent advisors for wealthy families. And what is happening in the region is that there's been a lot of liquidity events. Big companies have been sold to international investors in the late 20 years, the last 20 years. So that's had emerged the need of having an independent advisor on how to manage that liquid wealth that they encounter. Before, they had their companies, they had their real estate, they know how to manage those. But when they receive a big check, it became a lot of challenges for them. And the need of having an independent advisor in those cases is very important. Many people don't dimension the needs that have to exist when you are managing your own money. The topics about tax planning, how do you invest that liquidity over time? What are you looking forward with that money? Is it going to be inherited to your future generations? Is it going to go to a foundation? So it's very important to have a person that is like an advisor for their family, and that can give the complete knowledge on how to deal with that. So that's what independent advisors can give. Also, banks are in the same topic of promoting more of that independent advisory for clients, not only selling you funds, mutual funds, private equity funds, more going to what the needs of the family are. And I think that the position that Natalia has in the back is emerging very important, of having that extra advisory for families.
Very interesting. And in terms of where you're based now, we all see a lot of people clambering together and setting up offices and various investment structures. But is there a good structure or family, sort of inheritance structure in Latin America? I know in some parts of the world it's quite established and well known what to do and how the structures of companies and generations can continue, but in other circumstances, in other places, it's still something that needs to be worked on, and it's definitely something that we're working on to encourage family offices from across the world to expand into the Middle East as well.
Exactly. Yeah, we are seeing, and our company is an example of why the region is being observed to giving these services. Our company is located in Madrid, and the thing that they saw is that there's an interesting emerging opportunity for families needing this kind of advisory. You also see a lot of companies from the US giving advisory to families in the region. So we are seeing that. We are seeing that also big banks also are moving those departments which give that extra advisory for families and showing them to local clients.
Okay, great. And Natalia, the same sort of question for you. Based where you are in Central Europe, there seems to be more of a historic structure, understanding of structures in place, but are there new families cropping up, and is there a sort of format for them to follow?
Actually not. I think it's still in process, because as you know, Eastern Europe has its, I would say, first generation of people who have the wealth. And we expect that in the next 10, 20 years, maybe I would say even 5 years, we'll start to have the next generation entering instead of the first generation. And I would say some of the clients are prepared. Clients, I say clients, but some of the people are prepared and some not, because there is no tradition as such to plan how to pass the assets to the next generation. It will come, but I think it's something that you build over the years. It's not something that's so easily to implement. And maybe it also comes from assumption that our next generation will know how to do it, or how to manage the assets, how to continue the business. And what we always tell is that you have to prepare for it, because what is obvious for you is not obvious for the next generation. In Europe, there's quite a lot of tendency to have trainings and to show, I say Eastern Europe, to show how to do it, but it's still in process. There's no tradition model that is there. It's the tradition and model that was built in other countries, and the Eastern Europe tries to follow. There will be quite a lot of either instances when the business is sold or the business passes to the next generation, but we are not sure how it will function in reality. We hope for the better, and we try to prepare, but it will be an interesting times for wealth planning in this region.
Yeah, indeed. Santiago, we only have a couple of minutes left. Is there anything you'd like to leave us with on that topic?
No, I will go and detail on in making the new generation more involved in their wealth planning. I think that's a very important thing that we encourage clients to do. There is no age of involving them into their wealth planning. I think that you can involve your little kids since they are knowledgeable in anything, and make them part of this, so that could solve many issues of the future. Not having that event in which the parent or the principal of the wealth dies and nobody knows what to do. I think that the main topic is evolve your kids into your practices, make them understand what this means, how do you invest, all the tracks around your investments, how do you have to plan on a long-term strategy, and I will have that very.
No, great advice. Yes. And the timing couldn't be more perfect. And I'd just like to thank you both. Thanks, Santiago, and thanks, Natalia. It's I hope everyone enjoyed the session today. I've definitely learned a lot. I'm not a professional like yourselves in this topic, but really enjoyed it. So thank you both.
Thank you very much, James.
Thank you very much. Thank you very much, James, and thank you to our guests, Santiago and Natalia, for your insights on this panel. Thank you so much. Pues después de esta sesión, a partir de las 3 en punto, ahora vamos a hacer unos 10 minutitos de pausa, y a las 3 en punto vamos con la siguiente sesión, en la que vamos a debatir sobre la administración Biden en los Estados Unidos. Hasta ahora mismo.